Okay. All right, guys. Welcome to Happy Sunday, first of all, and hope you guys have had a good weekend so far. So that's just the remaining Sunday, and enjoy the rest of the Sunday that we are left with. So wishing you guys a good Sunday. And today is the 30th of May, and this is your Sunday's webinar that we focus on usually on oil mainly UK oil, which is your WTI as well as your UK oil Brent. Oils are general geopolitics, what would drive it up or what would drive it down, what are the geopolitical events coming up, a couple of things to discuss just to plan ahead in terms of this coming week, the new week on trading oil, both UK and US oil, but also to touch on commodities as a whole, mainly our favorite commodity, the yellow metal itself, gold. So gold, and then it also depends on what other commodities are being brought into the highlights of the week, driven by either geopolitics or even price action itself, both supply and demand. So we talk about things that come our way, but most importantly, to look at, to expect the driven direction and also what to expect for the week so that we can actually trade it. So that's basically the whole objective of the Sunday's webinar that happens every Sunday, 9 a.m. my time in Cyprus, in Limassol. Okay, so let's get going. A couple of things to highlight. There's something very interesting with regards to oil. So we'll talk about oil first, which is the US oil, or known as WTI, Western Texas Instrument. I've given a price and given the direction of oil to be on the upside. And we've given a price at buy at 66.90. I think the price is exactly at 66.90 or close at 66.90 or very, very close to it. But then the TP here was 73.10. Now I'm still expecting the price to go up, but what I would like to do is to adjust the TP price to 72.10, 72 instead. Okay, 72.50 is still possible, but 72, 71, 70, 71, 72 maximum, just to keep us in the safe area. Now, one thing to highlight is that the whole week, basically, as of Monday the 21st, if I'm not mistaken, Monday the 21st, Monday the 24th of May, but the week started for oil 21st, closing of Friday itself. And then coming into Monday the 24th, we've seen a big sort of surplus in terms of not production, but supply. So production remained a little bit on the weaker side, so that pushed up supply. So supply is still expected to grow. But one of the things that have actually motivated that is also the demand. The demand of oil, especially in the US, actually risen quite a lot. And one of it is because of its one of its biggest event, the US Memorial Day. I think it also has another name, but I can't remember the name. So it's the Memorial Day that is really big to honor all the ex-military men and women, basically, and that is, they make it really big, really grand as well. But what has driven the oil prices as well is the number of motorists and motorists demanding of the oil, I mean, for their parade, for the whole day and all that, that actually amounted to about 37 million road travelers as well. So they don't only have, they have it all across the United States, and it's a grand thing. So you know how big the US is and the number of people getting excited with it. That was Monday the 24th last week. And that basically improve the demand, not supply, improve the demand. So the demand went up for that 37 million plus. And then also investors and traders expect this week to actually be the next OPEC meeting to be positive as well, but positive for the demand. If it is positive for the supply, that means there's a lot more supply but less demand. That will make the price fall, but they are expecting more demand, but then sort of limited type supply. So the 1st of June, which is Tuesday, will be your next OPEC meeting as well. So that is really to look at. And we have seen from the 21st of May itself, the production of oil has dropped by 48 plus billion per day. So 48.3 billion, not per day, but on average. So that basically is a drop from its original production per day. So that basically I feel is going to really give rise to oil this week, but we want to be a little bit safe. We want to look at the technical side as well. Hence the reason I revised the price for TP to 72. If you want to take 70 to 72, either one price, but then maximum 72, take profit. That means to get out just to be safe. So I want to mark it here. Let me just get rid of all these lines that we have drawn. This is US oil, and we'll take a look at Brent as well. Usually Brent, not that happening at this moment of time. I mean, the factors, oh, I've taken that one off. Never mind, we'll rewrite that. Okay, so now we'll just look at it as in terms of price action as well. We'll take a look at it. This is from the monthly chart, but we'll go down. I just want to look at the big picture first. And you can see that no matter what happens, we have got, no matter however strong oil is from the big picture perspective, you want to be very, very aware of this level as your resistance. Okay, so this is quite far away, but it is very significant, and this is a very strong drop. So whatever you do, don't leave your price to go too close to the area of 73. Okay, so that's why I put a notch lower, just to keep traders safer, not to aim 75, 74, above 73, but keep it safer at 72. So 72, whatever you do when you're buying oil, US oil, WTI, make sure you exit at 72, just to keep us safe. All right, so then we might find more appreciation of price. That means it will go up much more above the 73.50 and above. So I would think 73.60. We look at what happens at 73.60 as a potential second TP. Okay, second, not TP, second entry, sorry. So it's 73.60. So for oil, we are using a little bit of you see, 73.60 itself is already there, you see. So 73.60 and above would best be our next entry, second entry. And we'll think about the TP later on for second entry, but we can roughly say, you know, at the, I would think at the 78 area would probably be safer. So I will put it at 78. Okay, so 78 meaning 77.90, you can actually exit just to be on the safe side. Okay, so that is your second planning forward. But right now, the price of oil for WTI has closed as of Friday at 66.54. So 66.54, we look at the last, the two digits after the decimal point. 54 is only about 6 pips away, 54, about 4 pips away from 50. So what we would do is that it's, if you were to enter your buy, it's better to enter at 66.90. All right, so I'm going to put in here as a blue line, and we'll write the price down as well. So 66.60 onwards can actually be your next entry, not your next entry, your first entry. Okay, 66.60. Let's change the color right here, blue. Okay, there you go. So that's where price is at right now. And I think just to keep it a little safer, I would take the take profit. This is for your first entry. Okay, so I will write it down right here. Right. Let's revise the whole entry price as well for oil for this week. Okay, so I'll put it like this. First, buy entry at 66.60. Okay, and TP at 70. 0.40, just to make it safe. First, we want to take it lower in terms of TP. I know I've mentioned 72 earlier on, but just take it stage by stage first, because I want to monitor and look at how strong, the price of oil would actually be rising to give us some room to see what would actually impact the price of oil as well, because we're expecting not only OPEC, we want to look at the story about Iranian oil coming into the picture. So if Iranian oil is discussed as well and it's looking positive in the OPEC meeting on Tuesday, which is the 1st of June 2021, then we may re-enter more, and then have much more expectation for a few buy entry for the week. You see, so we want to take this as a test first, your first buy entry at 66.60, while we monitor all the fundamentals and the geopolitics and everything else to see how much could it actually fuel the price of oil much further. And then we TP at 70.40. Okay, so this one here, I will write the first entry right here. Now these 70.40. So I wouldn't put the second entry and everything else yet. I just want to lay out the area right here. There is a bit of a buy zone at the 73.60 onwards to 77.90 area. So that's a buy zone, but that is a little bit far away as well. So 70, let me just also lay out another price. I think we can lay out another price right here. Just looking at all the candles as well. So second buy, all these could act easily be as of Monday, tomorrow. I think you may have to enter the 66.60 straight away. I mean, as soon as the market opens, you can enter the market. And then because it would already been there at that price by then. So you want to enter at any time for your buy of oil, and then you want to take profit at 70.40. Okay, and then your second entry, I would think it probably could be 70.60. Okay, so second buy entry 70.60. These are prices that for the second buy entry, you can actually have it as a pending order. For your first buy entry, you may have to enter straight away as soon as market open, and then just put your TP at 70.40, and then you plan your SL yourself. Okay, make sure you do have your SL though. So second buy entry 70.60. Okay, and then let's do the TP as well. Just want to evaluate that a little bit better. So I've got that there. It's a bit tricky for this one here at 70. Okay. Let me just give me a second. Now we have got it here, 66.60 area. There is. Let's pull it back a little bit. 66.60. 68. 70.60. Okay, give me a second, guys. 70.60. All right, I think the safest is just to, because we've got our next one at 66, second buy after we take profit at 70.40. Then we enter again. I think here we need to be careful. This is where we could actually do our 71.90. Yeah, 71.90 just as a test as well. Just we might change the second entry, make it higher on the TP, but not until we see prices as of tomorrow. Okay, as of tomorrow, we'll be able to tweak the TP, look at how much potential the oil could actually go with all the geopolitical event. But I'm most concerned about the OPEC on Tuesday, because they're going to discuss all the big events, especially Iranian oil coming in. So when they have lifted the sanction, confirmed the sanction, lifted for Iran, and then they were going to talk a little bit. I think the news is going to also pull in news about the sanctions lifted and the positivity of nuclear side of it as well. The nuclear news coming from Iran, how much freedom they're going to give them. And then with oil and nuclear, I think it's going to cause quite an explosive movement in the market for oil. So I think it's going to be a very volatile market, a lot of liquidity as well, a lot of investors going in and out, traders. So it's going to be quite a nice week for oil trading, and I'm expecting it more to the upside bias. So that's why we've got buy entries here. It's mostly on pending order, especially the second buy entry right there. So we want to look as well, but this is your rough sort of buy entry and TP. Please have your SL, okay, and have this as your pending orders as well. You can put it all in there just to plan ahead, okay. So this is for oil at the moment, because apart from that, we don't really have major news, but then it will build up when OPEC starts on Tuesday. So do look out from tomorrow night itself, news, anything talking about oil, especially. I think now globally we are riding on a higher price of oil and gas. Okay, so because of all these things happening, naturally, I think price of oil maybe in Malaysia as well. I'm not sure, but because in Asia maybe it's a little bit different, but here in Europe, we can already see the reflection of oil and petrol kiosk prices, in the upside. So yeah, you will see that. Trading hours for the WTI. Now, it's quite tricky because it does actually change. They do have their actually their timing when the traders and the investors, especially traders on the trading floor, they submit all their inventories and everything actually on Friday night itself. So sometimes the people who have the access and all that, they may leak a little bit of information in terms of the number of orders, coming in. So last Friday when the market closed itself, it's already sort of priced in. So there is no fixed session, but there is actually the timing that some traders, the selected ones, big investors, have got the access to a little bit of demand and inventory on Friday as the market closes. So that is why you can see that the best time to look at oil is actually when the market closes on Friday, in order for us to get a little bit of an idea of what would actually happen next week. So with all that has actually happened, with the rise of, because we have to look at a couple of days before as well. So with oil, it's not really about trading sessions like stocks or even currencies or equities. It's quite different actually, because it's geopolitical, number one, but number two, we need to look at what are the driving factors, whether it's geopolitical or anything like that. Like, for example, the Memorial Day is a very big day for the US, and it has increased to 37 million road users, motorists. So that actually, together with that, so we need to look at that has already happened, but then what to expect would actually be the OPEC, right? So then a lot of positivity has already happened last 2 weeks with regards to Iran. Everything's already like sort of priced in, giving investors the hope and things like that, sentiments of positivity. So we need to look at oil in that kind of manner, because that is how the investors and traders actually trade, to look at events that has actually happened, and then 1 week, 2 weeks after, what could potentially play out, whether it's negative or positive and stuff like that, only because it's contractual. It's by barrel per day as well. And then you've got all these large buyers, middlemen, and all that are actually buying to stock it. So they are buying to stock. So there's not really trading sessions that we want to focus on, but we want to look at their sentiments, their thought behind their head, what they expect 1 week, 2 weeks, 3 weeks, because they have to think like that. Now, not actually 1 week, 2 weeks, 3 months, 6 months, 8 months, 12 months down the road. Why? Because not only it's contractual, it does involve distribution. Distribution requires time of logistics. So it has to travel to the buyer, and then from the supplier goes into the right port. From there, all that takes into account. So they have to look into what drives it and how long it actually would actually take to reach the destination of the buyer and all that kind of thing. So we don't really look at sessions, we look at these things, okay, all these kind of stuff in how the investors and the traders think. So yeah, that's basically how we should actually be tackling oil, especially the US oil. Now, at this stage, from what's going on geopolitically, OPEC, Iran, the US itself, its own supply and demand of shale oil, its own businesses with shale oil, because it does not do crude oil business so much, the US. They are buying some, but then they want to be the leader in shale oil, so the oil that comes from the rocks. So they've got their own politics that they want to play as well to attract buyers for themselves, you see. So it's more like a geopolitical play. Now, the thing about Iran as well is that they have already spent a lot for their largest plant in the world, especially gas plants and oil pipeline. So it's time for them to actually make the money. So for now, somehow, actually oil price is not supposed to go up at this moment of time, but somehow so many other events in the US that has happened in Colombia, the protests, all that sort of like played out very nicely. I don't know whether it's purposely done or not, but it could potentially be, you never know. But just how systematic all this event has actually happened to increase the price of oil just because they want positive outcome with Iran as well, after they have sanctioned Iran for so many years as well. Now Iran is suddenly coming into the picture, and suddenly there's positivity in terms of nuclear as well. It's, you know, it's quite interesting to see that all these 360-degree kind of change. So with oil, it is going to be a lot of focus on how we have to think like a combination of you know, politicians, as well as those who want to make money and greedy and stuff like that. We have to think like that of what they would actually be planning to buy, to store, or to sell, you know, all that kind of thing. So right now, the market expectation as a whole is very high demand and supply getting a little bit lower. That is the play of the market, and that is the news and the sentiment that the investors and traders are absorbing into their mind. So this is replicating all over the world right now, and this is basically what they have. So investors are thinking best time to buy, okay? And this is what we want to also write along. So our trading session for oil is actually the geopolitical agenda by the investors, politicians, all the people who are involved, okay? So this is a very good question, actually, Mr. Kunan, so that we can go into the mindset of how we should be trading oil rightly. And this is basically, it is quite different in a way with gold, because gold has got a lot of connection but influenced by US as a whole, you see, so it's quite different. But here it's got lots of puppets, and a lot of people in its own respective rights have got the strings to each one puppet, and they have to all play together, like synchronized in a way, so that everybody benefits. But there will always be the users and all that who will actually suffer with a higher oil price to pay, you see, and then things get very expensive. So if you've got your oil price goes up, it will replicate, it will sort of like a domino effect into all the consumer spending. Every consumer spending will go up, all right? And then everything become expensive as well, just from the price of the oil. So then, things will become a little bit more stressful with the consumer end. But then by then, all the people would have made loads of money already. So yeah, so we want to ride along that. And I can see a lot of positivity on that. If we compare US oil with UK oil, let's say on the weekly chart right here, okay, you can see it sort of mirrors, not too far away. It still has got an area, it's appreciated as well, but then very close to a very strong, for UK oil, very strong 69, 50 area. But this area right here is a very significant resistance area at 69, 68. So I think the party is not really happening so much in the UK oil, but more on the US oil. So we want to focus more on the US oil. Okay. Also, let me chat a little bit about gold. Now, gold, because of the sort of ripple effect amongst all the commodities, you can actually see that it will be a lot more positivity on gold as well, okay, because we are looking at further depreciation of the US dollar, further appreciation for the week. We'll talk about it in tomorrow's Monday week ahead, about currencies in general. But I'm expecting already loads of appreciation for the euro, a lot of depreciation, falling of the dollar. So that would actually increase gold's prices upwards. We have had a very nice run of hitting 60p for gold, which is brilliant. But now that party basically needs to enter. We need to enter. That party is finished. We need to enter the next buying party. So with that, I want to wipe out all the lines that we see here, so that we can actually start afresh, plan ahead for gold. But I'll continue further tomorrow in more detail when we talk about currencies and everything else, trade ideas, trade signals, and all that for gold. So, but as of now, we just want to look at areas of risk for gold's prices going upwards. Now, this is daily chart itself. So the daily chart itself here, price has closed at 1903. Now we have got expectation for prices to go up to 1950, even 2000 and all that, right? But we don't want to get overly excited with it. But I want to show you from a chart's perspective. We have got price at 1903.81, but this is only planning stage. We need to look at tomorrow, look at what happens tomorrow to give us more confidence of it. Okay, so I want you guys to feast your eyes onto three major bullish mother candle. We've got one which is here, okay, and the second one which is here. Okay. Now notice that the price closed on Friday exactly at an opening price of a bullish mother candle of 20 this year itself in January, if I'm not mistaken. Yeah. Okay. So that is your first mother candle, bullish mother candle to actually look out for, because now what's happening is that a price of gold as well is entering into another bullish zone potentially. Okay, so then we also want to look at the third mother candle here, okay, which is here, right? I don't consider that one. I just consider the top three bullish mother candles of the past that we need to look at them and then try to have an average type. I call it a bullish zone. Okay, so here, let me just get rid of this one here. Now I'll use the shortest one first. This is the shortest one here, and I will lay it out based on its closing price right there, and then its opening price. Okay, so based on the shortest one itself, the current price has already traveled following the shortest mother candle right there, already about 3/4 of the way. Okay, so it's just there, let's say. So now what we can then do is I'll get rid of this blue shaded area right here and use this mother candle. This is for gold on the daily chart, okay, to actually sort of lay out a potential bullish zone, okay. So now the price for gold has already entered the bullish zone. So we're not planning for entry price and all that yet because market's not active. It's better to do that tomorrow. But we've got a rough indication of bullishness already entering, bullishness of price because bulls have entered the buying zone. Okay, so it is buy, it's a buy time actually. But then in terms of when, it's better tomorrow we discuss it during live market in the webinar itself, so I can then give you the prices as well, because I have to be very, very careful on the risk element, not to be overly excited. I need to balance my own mind as a trader to actually not be excited only on enter, buy, and then don't plan my exit. I have to think of exit first. The exit, because it's already in buy zone, so yes, you can buy at any time, but your exit matters because your exit will decide your profit. Okay, so here, for example, very simple. When we look at price now, just towards the left, I can see that is the threat right there. That is a bearish mother candle that have opened its price there. So I want to take a look at its opening price and I want to color that red. Okay, so here, okay, second. To mark your resistance, I want to cover that, color that, sorry, in red. Okay, so that is the shortest one right there. Now, that one there, based on that candle, gives me the price of 1915.17. But I want to pull it down a little bit. Why? Because I've got another area here that has a opening price mother candle as well. Not as long as that mother candle, but it's here. So I want to be safe at 1912.46. You can actually have that at 1912.40. So let me write that one down. So if you are buying your gold, already buying, thinking of buying, you buy anytime basically, and you're buying it, let's say as soon as market open tomorrow, and you buy it, whatever price that is, right? Make sure, okay, so I will put it as buy anytime, right? And then TP at 1912, I put that as 40, just in case. We're not tweaking gold with psychological numbers because it's not proven yet so much that it works quite well with psychological number. Okay, so I put it like this. Now, this is just your short-term type and test the market type buy position. Okay, we don't want to do anything yet. Then we look at later after it goes. Just put this as blue again. We take profit. After we've taken profit at 1912, we look at how much more rise of price. I think it's about to change the color. How price would react above 1914, because that is where a huge resistant opening price is of a bearish mother candle. So we take profit 1912.40, buy anytime, let's say tomorrow, and then you make sure you have your stop loss planned as best as you can, at least double the amount towards the take profit, and then you can plan your second entry only after 1914, let's say 1915 and above. Okay, so if it does actually go 1915 and above, then your potential take profit could be at 1922.40, let's say, okay, or 50, sorry, 1922.50. Now, that is just tentative. I'm not going to write that down first because I want to look at the market tomorrow, and then we can see the reaction of price based on this rate line, whether or not it is actually finding it as a very strong resistance and start to fall, okay, and then, or it is being pushed so much that it goes through 1914 or almost 1915 area. Then we plan our second buy. For now, we don't look at the second buy yet because we need to look at our first buy, right? So our first buy is a test only to enter the market tomorrow, just to look at whether or not we can gain something. But make sure you plan your stop loss because if you don't plan your stop loss and you just follow what you see, and it looks very positive and you are feeling confident because of the single candle that you see, then it might actually prevent you from going into the market this whole week, because this whole week is going to be a very good trade, I would presume, mainly for commodity currencies as well, because it's driven by gold, driven by oil, and then oil replicates all the others, commodities and all that. And also, if we are looking at from Monday 31st itself, we've got a lot of Chinese, not a lot, but the manufacturing of Chinese data will be out first, and that usually impacts Australian dollar and New Zealand dollar as well. So let me just see whether I can do this. So Monday, tomorrow, 31st, right to Friday, the 4th of June. Let's see what's in store. So as you can see, we have got Monday 31st. Oh, not sure why, but the calendar has actually, oops, not really showing the whole week so much. What about if we go on one by one? Tuesday. Yes, and yes. Monday 31st. Oh, not good. So yeah, we can actually take a look at other economic calendars as well. We'll take a look at that tomorrow as well in detail, just to plan out the whole week anyway. So no problems. Monday 31st, right there. Tuesday, you've got, see, Australian data right after Monday's Chinese data. So yeah, it's definitely going to impact. So we've got some data. Wednesday, 1st of June, 1st of June. Okay. This is, yeah, we've got the OPEC there as well. All day meeting, 1st of June is definitely a very high impact news marked in red. And then we have all the USD. We've also got this very, very interesting GBP as well on that day, and then GDP for Australia as well on Tuesday, the same day as the OPEC meeting. So I would presume a very volatile day as well. And I think it would start the volatility from tomorrow night itself, especially after the during the US Open itself, because all the news will start to come up with expectation of the OPEC meeting and everything else. And we've got a lot of manufacturing type data as well. And you see how the week will actually end with Canadian dollar. and it's a commodity currency as well. And usually whatever happens with the oil news, it will impact Canadian dollar, and Canada already will have its own data release as well. So I guess, boom, it will increase that. And also, on Friday, June 4th is your first, it is the NFP for the month. So it's the first Friday of June. So that will again really bring about. So I'm expecting more and more negativity of the US dollar, so that we can see more positivity for the gold. So I think that could potentially play out very well. Okay, so we've got questions. Give me a second. I'm not sure why my chat box doesn't appear. All right. OPEC meeting can influence USD price. Yes, of course. It's not exactly OPEC meeting influencing the price of USD, but OPEC meeting will influence oil predominantly, and then oil will start to impact geopolitically and everything else overall, because the OPEC meeting has got a lot of the Saudi side, Middle East, stuff like that. And then we will also see the news of what would actually be coming out from the Iranian side of it. So we have to see that this whole week is a very geopolitical play. That means that it's like US versus the Middle East. If the Middle East has got more positivity on the news, that drives the oil up, and then OPEC meeting was positive and stuff like that. That basically means it's going to be positive for the Middle Eastern and then not so positive for the US. That will then drop the price. But then looking at the calendar itself, there's a lot of other factor that might actually pull the US down, especially on its own data. And we have to look at its manufacturing data. We have to look at the NFP as well as of Friday. So we want to look at the economic side of it as well for the US, especially because they have been hiding a lot of news in the past, especially about a month ago and all that. All the stocks rallied, everything was positive, very rosy and all that. And then they got questioned about the real numbers. And then it's all about inflation, hyperinflation, and then it dropped, right? So it started dropping already, and then now investors and traders are having a little bit of a negative impact on their investment because of that US positivity that was blown up, but mainly because of inflation. And then we want to revisit the whole idea of US Treasury, whether it is actually falling or not. So it's a little bit of a separated line from what will go on with OPEC and all that with the US, actually, because it's got its own play, and that will drive itself down or up in its own rights. And then OPEC will actually have a geopolitical global influence because the new player is coming back, which is Iran. And Iran actually sells its oil a lot to China as well. But before this, Iran was selling oil to China through Russia. So Russia was the middleman. And then Iran was actually selling, China was actually buying the oil from Iran through Russia, but not in US dollar, in CHF, in Swiss franc. So there was a lot of politics went on there. So Chinese were still getting barrels from Iran, but in a quiet down way, under. And then, so now the whole dynamics will change. That actually means Russia will be out. Iran maybe has the ability right now, because of lifted sanction, to deal directly with China. So that could then impact the whole manufacturing data of China to be more positive. They can cut costs a lot more, in my expectation. That will then give rise to a lot more power of manufacturing, buying and selling with Australia and New Zealand. So that would also increase Australia and New Zealand too. So I think the oil side of it has got a sort of a different ripple effect. It's not that it's not connected to the US, it is, but on the surface kind of thing, it's got other things that it's connected. much more, okay? Because now US has to repair its data, its own, what it says to the whole United States of its own economy and all that. So I think the US movement, the US dollar movement that will impact gold will come a lot from the data and the economic data, especially for the US for this whole week, because we also have the NFP for the month as well in the month of June. Okay, so yeah, I think we've got a lot to discuss tomorrow. So tomorrow, the market wrap up itself, as well as the midweek Wednesday one, would actually give us a lot more room to think after the price movements have actually set in. Right now is a bit too early because anything can happen at any moment of time because of the news alone, and because it's so geopolitically driven in terms of what's going to happen this month, especially with OPEC and all that influence to oil. We have to let it run a little bit on the gossips of the market, and we never know. Some surprise will come up from the States, some surprise might come up from the Iranian Middle Eastern side of it. We just don't know that, but I'm expecting a very, very volatile week with the positivity of the OPEC and also with Iran coming in. And maybe suddenly you will see US and Iran becoming good friends. And if that actually happens, then you will see a lot of prices, especially for oil, go up. When the price of oil does actually go up with all the commodity currencies, naturally the US dollar have to actually fall as well. But then we will hear in the news that oh, it's very positive with the deal in OPEC and all that. But like I've mentioned, it's actually, it has to be on a weighing scale. If it is upside on the Middle East, it has to be downside on the US, and then the news will come up that it's good news, but it's also very risky because it's a very risky deal or something like that. So that will drive down the dollar a little bit. And then people in the US or politicians in the US will come up with negative comments out of the positive news as well, because it's always going to be a weighing scale. All right. So they are competitors at the end of the day. US, Middle East, big competitor, especially in the oil side of it, because the US wants to promote, sell their US shale oil. Okay, they are not really, because they know if they battle with Middle East, they cannot really win if they battle with Middle East with the crude oil. So they're not battling with crude oil with the Middle East. So yeah, that's basically it. Okay, hope that makes sense. All right, there you go. Okay, guys. So that, yeah, that's basically it. I mean, it's going to be an easy Sunday type thing, just for us to monitor. But I'm looking at a very nice play of the market on the positive side for oil. But we want to take precaution. We want to be careful. Okay. So that is this is for gold as well. The gold is the same thing. I've laid out the price right there, as I've mentioned already. Buy anytime, but then you take profit limited to 1912.40. And because you guys are going to wake up earlier than me and be exposed to the market first as the market open in that side of the world. And then we want to monitor price very carefully, like hour by hour, 2 hours, 3 hours, just to see. My concern is mainly how the news and sentiment is going to be marinated into the mainstream media and what's going to come out in the news, because it's so geopolitical driven that a lot of things is going to happen. Maybe tweets are going to happen as well. Maybe some things are going to be said in the OPEC, and then somebody is going to retaliate from the US, and then they're going to retaliate back. So this is basically the time to ride along some great volatility, but we want some solidity in terms of the trend side of it. So that is quite difficult to get when it is geopolitically driven, but we can move around with what is said, what is expected from a short period of time to medium period of time, not very long. So that's why I want to trade in stages as well for oil. So, but I think it's going to be a great week to trade currencies, commodity currencies, especially US dollar, to see what's happening there. So it would actually impact gold. So yeah, let's trade and right along the trend and watch out for risk as well, because we've got lots of risky areas as well, you see, all there. So I want to be very careful trading it. Okay, so we'll guide you through, and join me tomorrow and we will go through it in detail. Okay. Yes, definitely. Okay. What happens in this is a good thing you reminded me, Mr. Kunan. Thank you for that. So ATI London stands for the Academy of Traders and Investors of London. Basically, it's our certifying body in London that comes up with the certification site. Now, in terms of the type of courses, the title of courses is basically entirely up to myself, and I have got 6 to 8 titles already in plan, including Forex related, crypto related, and investment related, and also commodity, specifically into assets like what Mr. Kunan has actually mentioned. So yes, I am thinking of oil, gold, silver masterclass and a certification course in oil, gold, silver, especially. And then we want to talk about the geopolitical play. So I want to train people to understand politics, geopolitics, but then how do you apply it into trading straight away, and then match it up with technical analysis as well. So yes, the answer to that is yes. I am literally collecting info as of now, and preparing that course for oil, gold, silver. And I want to talk a lot about physical investment into the precious metal. And I've got connections with some actual vaults in London and different parts of the world that could give investors a very good rate to have the actual physical silver, no matter how small or how big, to be sent directly to your home, and then you can bring that precious metal and go and put it into the bank. And we will have guidelines. I'll have guidelines in the course itself. How do you trade gold, oil and silver? Not oil, but especially gold and silver, you can trade physically as well. But then at the same time, trade on CFDs, like how you are doing on the MT4 as well, so that you diversify your portfolio on online trading on the MT4 to make you that money and all that. Then whatever money you make from there as well, if you want to invest into physical as well, you can, because then I will be recommending some companies like the ones that are public listed and the one that really steady, for you to actually invest, if you want to, in physical gold that can be delivered to your doorstep. But also you can actually store it there itself, no need to have it brought to you to Malaysia or any parts of the world, and basically sell it to them anytime you want to sell. Okay, so if you want to sell it at the market price at some point, then you can get that cash. That cash will be put into your account, and withdrawals and all that, that's all possible. So I like to do that, and I've been doing that for the past over 12 years now, collecting physical gold and silver. And basically some people are talking about copper as well now, palladium and various other precious metals. So this is called physical precious metal investing. So I want that master class of gold, oil, silver, to also give you a little bit of guidance to understand how do you actually hedge as an investor, to diversify your portfolio of online trading and physical ownership of precious metal as well, because it's probably one of the best things that I've actually done long time ago, and it is proving to be quite a good style of investing, is to trade online as well, make that fast money and all that, because you can make money on CFDs, up market or down market. Now for physical gold and silver, it's appreciative on the value, only it's going up, for example, right? But then whatever that you do online, you can actually make it as your funding capability to buy more physical gold and silver at the right time when the price is expected to go up, because we are doing the analysis here. So we're doing analysis here on the CFDs. We are also earning from the CFDs, but then we have our side pockets to put it at the right time for buying physical silver and to cash out a little bit. And then we take that cash and put it back into our CFD, make more money here, trade currencies and anything you want here, and then look at the timing. So yeah, that is what the course is all about. On the, I would title it more on a master class in gold, silver, and oil trading, and then I'll put it in brackets that it would also include physical investment or buying of physical gold and silver. Okay, hope that would be interesting. So yeah, we're looking at close to about 8 to 10 topics that will actually be finalized and be published in Bretton and the ATI for what are the certification courses. They will all be detailed. Who is it for? What's the title? What's level 1, level 2, level 3? What's the cost, price? What certificate you get? All the certificates are internationally recognized, coming directly from ATI. Okay, so this is the first time ever, after waiting for 7 years, that I'm able to now release internationally recognized certification courses, so people can actually put it in their CVs as well, especially our younger generation, you know, upon leaving university or still studying and they are above 18 years old. It's a good chance for them to learn practically, but also look into investment topics, personal finance topics as well. I'm looking into that, psychology topics for traders and investors, and then to understand your style of trading, to talk about global investment opportunities as well, you know, where people can put their money in after trading in Forex, and where can you diversify, where can you put it there or put it there, and then the money comes in, you put it back into Forex trading. So you are self-funding through your investment. So we can run courses on these as well. So that's basically it. We've got loads of courses that I'm planning, and certification courses as well. But most importantly is it's certification, but it's not theoretical only, it's physical. I'll have contacts for you guys as well. If you want to invest in let's say in e-commerce sites, then we've got the whole structure for you, who you need to contact, how you need to do. So it's more like a business consultancy type approach as well, but it's not only Forex, you see. So it will be more fun, and it will be trading and investing as well. So you get a nice certificate to go with it, but you get to build your network and then get practically coached by other experts in the area that you are looking at. Even yacht investing, on the chartering side, even holidays, you want to invest in Greece for, you know, little chalets in the middle of the sea. You want to invest into cafes, restaurants. You want to invest into land, holiday places. You know, there's many things, and I like to venture into various others, but we can make those as a channel to actually create more wealth, more investment for you, to actually channel it back into Forex trading as well. So I think this ecosystem would actually be much better and make you enjoy trading and investment much better than just focusing on Forex trading only. You know, it's actually a very narrow area to just trade Forex, because you can trade Forex, money that you make, you can actually grow it elsewhere, and then money you make from the growth elsewhere, you can pump it back in. So you'll be self-funding it, you'll be funding it from the investments itself, as opposed to funding it from your own pocket, you see. So that's basically the best thing to do. So I want to guide everyone to do that via the certification programs as well. Okay. All right, guys, I think that's all I have for you guys. Hope that's been clear. Thank you very much for asking that, Mr. Kunan, to remind me on that. So that's good. Brilliant. So, okay, I think that's all the time I've got for you guys. I'm off to the beach. It's really, really hot today, 30 plus degrees here in Limassol since early in the morning. But I'm going to do some more analysis by the sea. So I hope you guys as well, enjoy the rest of your Sunday. Take care, guys. Thank you for joining me this Sunday. Take your precious time of Sunday to be with me. I appreciate that. Thank you very much. And we'll see you guys tomorrow in the Monday's week ahead session. We've got a lot to discuss, and I think we've got a lot to trade as well for this week. So happy geometric pipping to all, and take care, guys, and we'll wish you all the very best for the week ahead. Take care, guys, and thank you. Bye bye.